Good morning, my dear friends. In the last class, we understood the TDS, TCS, returns under GST, elaboratively, apart from that, interest, apart from that, e-invoice, e-way bill concepts we understood. Now, we left over importantly the following chapters: demand and adjudications, assessment under the GST, refund under the GST, appeals under the GST, which includes Joint Commission appeals to the level of the Supreme Court of India, in addition to Authority for Advance Ruling, followed by Appellate Authority for Advance Ruling. If I covered these four topics, we left over one gigantic topic called as offences and penalties. These are the 5 topics. Today I have focused on these 4 topics: refund, assessment, adjudication, appeals. If able to cover today, then leftover portion appeals are these particular offenses, penalties, if time permits, to take today, otherwise by tomorrow. By tomorrow we are going to conclude the GST part. We left over 3 days: today, tomorrow, day after tomorrow. 100% syllabus will be complete by 11th of August without any doubt. In this process, the last day of the class, I will take up customs and foreign trade policy. Dear friends, refund under the GST, if you refer, broadly there are 2 types of routes to go for refund in general, elaboratively, broadly. What is these 2 types? These 2 types are one by one as follows. One is export of goods or services under LUT, letter of undertaking, without payment of GST. Such exports, called as zero rated supplies, such exports are known as zero rated supply. Taxable supply includes zero rated supply. In this process, if you proceed with option 1, namely export under LUT or bond wherever the department demands you execute, otherwise nowadays exports are very encourageable. Only thing is, recently the tariff master levying the tariffs like left and right, which is going to hit that country economy like anything over a period of time. See, as a financial professional, I'm telling you, if a country has no stabilized foreign trade policy, that country may be going to go for liquidation only. This happened once with the country called Greece. The country called Greece almost all liquidated because of not having the proper foreign currency and foreign trade. Now please come back. Generally, now my dear, by levying the tariffs by the tariff master on account of our exports, we got opportunity globally to export rather than to exclusively export to the country called USA. Now the exporters are searching so many avenues of countries globally to export our goods, rather than to export a country where suffering with a huge amount of what we can call trade tariff. Means what? They are dumping that if I am going to sell the product for 100 rupees, the tax should pay 50 rupees. Embarrassing situation it is, not for exporters to the country called USA. Reason the Amazon, Walmart, and all in the country called USA unable to import the goods from India. Then Indian exporters, they have a excellent market in India itself. India is a population 140 crores. Population 140 crores means what? Almost globally one of the largest country it is. The population is asset for India. Internally will consume. In that case, what happened? The export product, when not exporting, unable to export, selling in India, what happened? No, supply increase. Supply increase the product. What is going to happen? Demand decreases. Then a customer get ultimate benefit in India to get a export quality products. You get my point, sir? That is one market for the exporters, and there are other countries are there for the want of the product. Instead of paying 50% tariff to them, having a margin of 5%, we can export to other countries. Because the thing is, if India accepted the terms and conditions of USA, there is no guarantee tomorrow that fellow will reduce the tariff. There is no guarantee tomorrow not going to increase the tariff. We cannot work on based on the other directions. Independent country, sovereign country, India, powerful country. If that country tariff master says that India is a dead economy, then we can decide the knowledge of that person. Means he has no knowledge in trade, economic aspects. India, one of the largest, fastest growing country economically among the countries, globally third largest country, India, which going to be claimed largest economy development. Having that country such a huge performance, stabilized performance, we always look for peace to all, and on that country, that tariff master, idiotic manner, dealing with Indian foreign trade. It is going to be hit back like anything to that country. The public will say, hey, Mr. Tariffman, get out from your office. You are not fit for this office. That may going to come. And the economy will badly affect. For us, no problem. We have our internal consumption itself huge amount. Now please come back. Why I refer this? No, export. When the export comes into picture, I got a latest trend now going on in the print media, electronic media, tariff war. That's why I have talked about this. For India, nothing is going to be affected. It is affecting them only. That we'll realize later on. If expert says something, the person who is head of the state should listen. Should listen. Simply arrogant man says that I do not know that. I want this. A small kid crying, I want lollipop, I want lollipop. Mister, your health is not good. You are affected so much of cold. Again, the lollipop is badly affect to your health. No, I want lollipop only. Like that tariff master acting globally. The statements, no stability. When there is no stability, absolutely there is no ability. Universally apply to all. There must be stability, then only ability will come. Just because of one time writing CA final, if fail means so what? Take great pride to write next time by studying well, by getting more knowledge. You got a opportunity to acquire further more knowledge. That spirit you have to have. Then easily you can pass it. Oh, first time fail, I'm quitting, that's all. Never going to be come into streamline again. That's what stability always required. Example of mine, I announced the free classes with Bharadwaj Institute. One student, two students, or zero students, I do not know. I will take the class, recording class taking place. This is stability. Oh, expect 100 students, so what? If not, tomorrow will come. That is called stability. Lage rahna means stand with that, attach with the things, doing the good things, for the exploiting the knowledge with the others, enhancing their knowledge towards the expected of the institute. That is what good thing. Then attach with that. Exports to Russia, export to China, export to European countries, Brazil, Canada, South African countries. So much of venues are available for exporters. When we export the goods to South Africa, there are two possibilities. Department says, export man, without any bond, we trust our exporters. They are the star exporters. Export. We are not going to be make any hurdles to you. Just inform us under a letterhead, which is LUT, letter of undertaking. Only when the department got suspicious, you people last time not properly realized the payment, we are not happy with exports, so you please execute a bond to safeguard the interest of the revenue. That time only bond will come, which is equal to the duty amount, which is not going to pay on account of export under the zero tax category. Get my point, sir? Is one category. Now, if you take that category in a simplified manner, the benefit for the exporters, the benefit for exporter as follows, my dear. Now, export at FOB value, for example, 100 lakhs. IGST at the rate of 0%, which is 0. Rupees 0, 0%. 0% of tax is also the rate of tax. Now, the exporter has input tax credit on inputs, input tax credit on input services. That means input tax credit on capital goods not allowed to claim as a refund under the GST even for exports. Only inputs on ITs and inputs, ITs and input services, input services, input services. For example, which is available 8 lakh rupees. Then if we reduce from the tax liability, you still have what? Excess ITC. How much? 8 lakhs. On account of export, no? This excess ITC can ask for refund, which is under section 54. To claim the refund, there is time limit of 2 years from the relevant date. In the relevant date, the given is export. From the date of export, 2 years. You are eligible to claim refund. Refund in the sense what? The amount will be going to credit to the bank account of the exporter. RFD01 application, RFD06 refund amount. You get my point, sir. You can get the refund amount in one the bank account, not yet in cash ledger. Bank account itself you get the credit. That means what? You get back the payment of tax what you paid, which will highly useful for you to use that money for your working capital requirement and to further manufacture and export the goods, or price can be reduced to the extent of refund we are claiming, thereby to export the goods at a lesser price to capture the market from outside India. I am providing only introduction with regard to refund. I have not started the refund chapter. This is one option. Export under LUT. Where one major drawback is there. What is this major drawback here? Anybody? The major drawback, anybody? Major drawback. You have to say major drawback here. Here is ITC on capital goods not allowed as refund. Coming to the option 2 is important. In case of option 2, export by payment of IGST. Export by payment of IGST. You can ask for refund of IGST paid on export. Second option. Sir, which mad fellow will pay the IGST on export, sir? Why should I pay GST on export as IGST and the same asking for refund? Here, wise exporters, intelligent exporters who want to claim their maximum amount of credit as a refund, they go for this option. Option 2, export the goods by payment of IGST on export. Whatever GST paid on export, ask for refund, thereby you ultimate beneficiary to claim maximum amount of refund. You get my point, sir? Look on the above scenario, option 1, major drawback is what? ITC and capital goods not allowed as a refund. For example, this is the amount ITC, let us say ITC of rupees 18 lakhs on capital goods, not qualify for refund. Thereby what happened? The 18 lakhs of GST on capital goods will form part of my cost. Get my point? Now come back here. In the given case option, I am exporting FOB value of export $100 lakhs. How much is it? 100 lakhs. IGST applicable for my product 18% is on 100 lakhs, which is 18 lakhs. I want to pay 18 lakhs. Then I have with me less ITC on inputs, let us say 1000 rupees. ITC on input service, ITC on input service, let us say 2000 rupees. But I too have with me here ITC on capital goods. For example, 18 lakh rupees. While paying the GST, am I eligible to avail the ITC on capital goods? Yes. ITC is not disallowed. ITC on capital goods not qualify for refund if we export the goods under LUT without payment of the GST. Is option 1. In option 2, even option 1, ITC and capital goods allowed as ITC, but that excess credit not qualify for refund. Whereas I am not going to go option 1 now. I am going to go option 2. I want to pay the tax. I love to pay the tax on my exports, which is 18 lakhs. While paying the tax, can I avail? Can I utilize ILTC and capital goods? Yes or no? Yes. So here I am utilizing this ITC 18 lakhs on capital goods as ITC utilized. Then nil. That means electronic cash ledger. I paid how much? Nil. Nothing, 0 amount. Now, in the second option, tax paid how much? Tax paid on export is how much? Huh? Tax means IGST. IGST paid on export how much? How much I paid the total tax? Total tax. I will say here one more point. Total IGST paid on export is how much? Through electronic cash credit ledger 18 lakhs, to electronic cash ledger 0. So total paid how much? 18 lakhs. Understand? Through electronic credit ledger 18 lakhs, through electronic cash ledger 0. That means total I paid how much? 18 lakhs. Have I paid the tax and export? You tell me. Total IGST paid on export. Tax paid on export 18 lakhs. Allowed as refund. That means what I am claiming refund? Not the credit and capital goods. I am claiming the refund tax paid on capital goods. Understand? Here you should understand. My liability, you leave it this provision. My liability 12 lakhs, Raja. 12 lakhs to pay to department. Is clear, bro? I have credit 4 lakhs. I adjusted, utilized it. Balance amount how much? 8 lakhs paid by cash. If I paid 8 lakhs by cash, department recognizing I paid for 8 lakhs or 12 lakhs. 12 lakhs. Department says, yes, I received from you through electronic credit ledger 4 lakhs, to electronic cash ledger 8 lakhs, total I got 12 lakhs. Is what now? So, reduction of input tax credit equal to payment of tax. Reduction of input tax credit is equal to payment of tax. My reduction input tax credit on capital goods 0. 18 lakhs as there, I utilized it. It become 0. So, input tax credit on capital goods reduces. How much reduced? 18 lakhs is equal to payment of tax. Get my point, sir? So, what I paid on export, I am eligible to claim refund, which is option 2. Now, which exporters will go with the option 2 means, especially startup companies. Initially, they invested huge amount of outflow of cash in machineries, capital goods. There is huge amount of credit, and their output wholly they are exporting, then huge amount of credit capital goods. So, as auditor, as a chartered accountant, you suggest the client, hey mister, in your case, these exports, you please export by payment of IGST. And we will able to convert input tax credit on capital goods into as payment of tax, and that payment of tax we can ask for refund. Is it clear, my dear friends? These two options is left to you. Now, I am going to focus attention on the first option first. First option, where we have refund formula based refund. Rule number 89 sub rule number 4 says that which ITC qualify for refund on account of export? Under option 1, input tax return, input goods, input tax return, input services. That is called as net credit. I will explain to you furthermore by showing the formulas in the material. Rule number 89, sub rule number 4, where formula based refund. Why this formula based refund is required? Sometimes what happens, exporters may not be in a position to export 100% of their output. Are you getting my point, sir? Some of the production they're clearing into domestic tariff area. Some of their output they're exporting, partly clearing into domestic tariff area. The goods supplied into India attract GST. The goods export outside India, of course, zero rate supply. Now, for the goods cleared into domestic tariff area, goods are cleared for export under LUT without payment of tax. For these two type of supplies, my credit is common credit. My inputs are common. My input source is common. Then I should identify the net credit attributable for my exports with a formula. Net credit multiplied by export turnover divided by total turnover for the tax period for which you export. You get my point, sir? For a tax period, August month, exports divided by total turnover for the August month, multiplied by net credit. What is a net credit? Net credit is a credit only belongs to ITC on input as well as input service. Input service. Input service. Got the clarity? While doing so, here Mr. Exporter, if there is a opening balance, ITC brought forward, if anything is there, should not consider for net ITC. August month, you have purchases, input goods. July month, you have purchase input goods. July month excess ITC carry for August month opening balance as inputs. That should not be considered for formula. Net credit only for the tax period credit. For the tax export turnover for which month? August month. If so, previous period opening balance carry forward should not be considered. For that month credit, you apply for that. Are you my point to understand, sir? Meaning what, previous month you also export. You have been proportionated. The excess credit you understand. Then you can ask for refund. Over. That means if you not ask for refund, means the excess credit may be resulted for domestic clearances. The credit attributable to domestic clearances never going to qualify for refund. Point number 1. Next point, turnover. I said exported turnover means zero rated supply of goods. Suppose if my product A is exempted, product A is exempted, which is nil rate of GST. If I sold into India, nil rate, which is not a zero rate supply. If the same product which is exempted in India under GST, if I export to outside India, takes the mode of zero rated supply. Meaning thereby my exports taxable as well as exempted. Together my exports called what? A zero rated supply. Can I claim ITC on that inputs? Yes. Can I ask for refund? Yes. If I export the exempted goods in India, which I export outside India, then input goods for producing that exempted goods, ITC is allowed. Excess credit on account of export, ask for refund. That means refund is last resort, meaning thereby, listen to me my dear, I export part of the quantity, part of the quantity cleared into DTA. It's clear? My credit 1 lakh. My credit 1 lakh. Attributable to exports, rupees 80,000. How much? 80,000 rupees can claim refund. It is there in my hand. I cleared some of the finished goods into India, into DTA. There, I am liable to pay GST clearances into India. How much liable to pay GST? For example, 50,000. My credit is how much? 1 lakh. This credit 1 lakh input goods split two parts. How much attributable for export? 80,000. Attributable for input tax credit domestic clearance 20,000. It will be great. Now, my domestic clearances is so much on which I am liable to pay GST. How much? 50,000. 50,000 less the credit eligible available for domestic clearance. How much? 20,000. Balance how much is that? 30,000. Have to pay or not? Keeping that rupees 30,000 as a pending, the rupees 80,000 rupees credit attributable for export supply qualify for refund, I can get. Then what shall I do? This rupees 30,000 have to pay Airtel and cash ledger. Are the best way. How much you got credit attributable for export? 80 lakhs. From that take 30 lakhs and pay off, adjust this particular liability. Ensure that the liability is nil. Then leftover credit, how much is there? 50,000. That is only qualify for refund. These and all introduction to your final level from refund chapter. We have amendments. I will refer now. Now continuation. Rule number 89, sub number 4 gives the formula for claiming the refund proportionally for export, which is equal to exported turnover divided by total turnover for the tax period multiplied by the net credit. The net credit should be the credit pertaining to the tax period, input and input services only, not in capital goods credit. Is clear? Very good. So we know the formula. Now here, what is the exempted turnover, export turnover? What is a total turnover? Which is adjusted export turnover divided by adjusted total turnover. Here, one amendment taking place, my dear, in the year 2024. If I supply the goods under rule number 89, sub rule number 4, capital A, or sub rule number 4, capital B, where my supplies of exports, two exports are there. Exports under LUT, 100 lakhs, which includes rule number 89, sub number 4, capital A and capital B, exports also there. Earlier, this rule number 89, 4A, 4B exports should be eliminated from our export turnover and look the balance. Such elimination now omitted. As a result, my export turnover includes rule number 89, 4A and 4B. My credit attributable rule number 89, 4A, 4B should include now this, because wherever rule number 89, 4A appears is now omitted in the formula. What is rule number 18 4A and 4B? That is important to note. Rule number 89 4A 4B is nothing but are as follows. Look here. Refund claimed on input tax credit paid on inward supply deemed export, meaning, one example, supplier X supplied to Y, holder of AA, advance authorization one of the license under the foreign trade policy or EPCG scheme, namely export promotion capital goods scheme, to that holder in India. I supply the goods to encourage him for export. My name is X Limited. My supply is called deemed export. I am a deemed exporter. You get my point, sir? Such a deemed exports are there in the export, eliminate to claim refund purpose. It was the provision. Such a rule number 89 4A 4B wherever appeared in this particular refund claim process is omitted. Why omitted? Because to encourage the exporters, that also club in the turnover, you can claim more amount of refund of input tax credit. In this regard, look here, amendment taken place. Whenever you talk about here, rule number 8 4 sub number 4A 4B 4A 4B in rule number 89 shall be omitted from 8th October 24. As a result, my export turnover, which includes turnover of rule number 89A 4A 4B, is the meaning. Omission impact, omission says exclude. Before omission, exclude. That exclusion clause omitted, thereby include. You get my point, sir? So we look at the problem, you understand. Now only we got a formula. Rule number 89 sub number 4, where export of goods under LUT without payment of GST is clear, Raja? Which is called zero supply, where the exporter can claim refund of input tax credit on inputs, input tax credit on inputs only, but not on capital goods. So net credit is input tax credit and input goods, input services for tax period multiplied by export turnover, which includes rule number 18 4A 4B turnover, which is deemed exports, divided by total exports. Total exports includes all taxable as well as exempted. Get my point, sir? Now steps has been laid down. What steps laid down? Exporters, see, if exporter is good person, honestly doing all exporters, no problem. Some of the exporters showing the FOB value of export, dubious value, 100 crores of export FOB value. After exporting that, importer says, exporter 100 crores importer, no, 10 crores only for you, 90 crores bad debts. That means what? You are exporting for 100 crores, showing that much value, claiming proportionately that much of huge amount of refund. Later on, you are going to be a bad debt case. So these and all causes to bring further strengthening the provision. The law of the land here says steps we follow. Numerator, when we talk about export turnover, should be the value as follows, shown in the shipping bill for export. Look here, first step, value of goods export out of India shall be FOB value which is declared in the shipping bill. Shipping bill is the bill required for submission by the exporter to seek prior permission for export the goods through sea or by air. Bill of export is the application the exporter should submit before export through land route in the office of the customs for seeking the prior permission for export through land route. Export given, let export. Then the exporter can load the goods in the truck for export by land route, which is there to country called Bhutan, Myanmar, the Nepal. We can export the goods. We have the route to export it, Pakistan also, but that route is closed. They are not fit. Get my point, sir? Now please come back. What is the value shown in the shipping bill or bill of export? Bill of export, when export the goods through in a truck by land route. Shipping bill, when export the goods through sea in a vessel or by air in aircraft. Is clear, my dear? Who should submit a exporter? What for? To seek prior permission for export the goods. Unless until the permission given for export on shipping bill or on bill of export, you are not allowed to export. In spite of that, if you export the goods, these goods are smuggled. Smuggling not only into India, smuggling to outside India. Without the knowledge of the customs, goods coming to India or going abroad is called smuggling. That cases under the customs law, severe punishment, non-bailable arrest warrant will be issued irrespective of the value of the goods. But anyhow, we will refer the later on in customs law. Now come back. What we are referring? Export under GST. Export turnover shown in the shipping bill or bill of export. Compare with value declared in the invoice or bill of supply. Whichever is less, see, not higher, because numerator is bigger na, refund also more. Therefore, control on numerator. Whichever is less. Value shown in the shipping bill or bill of export compared with the value shown in the invoice, FO value, whichever is less. That you take. After taking that, not stop at the level. Furthermore step. The output of this. Sir, for example, bro, look here. It is 100 lakhs. Here, 90 lakhs. The output is 90 lakhs. Is clear, sir? That 90 lakhs, here you compare further. Generated supply of goods. What is it is? Value generated supply of goods made during the relevant period without payment of tax under bond. So, here this value comes into picture, which is how much here? 90 lakhs. This value compare with 1.5 times of value like goods domestically supplied by the same or similar placed supplier. Sir, locally they supply DTA, domestic tariff area, supply taking place, sir, which is 40 lakhs, sir. 40 lakhs. On 40 lakhs, the value of this actually 40 lakhs only in India. That you multiply with 1.5 times, which is equal to 60 lakhs. Among these two, whichever is less, which is lesser? 60 lakhs is our numerator. You get my point? If, for example, denominator, which is 60 lakhs exports plus locally sold, for example, 25 lakhs. Locally sold, for example, how much comes in? 85 lakhs. The numerator should come in denominator. Then create an input goods input. For example, I am saying 15 lakhs. On input goods, inputs create. Then the amount is come how much? 10 lakh 58,000. This is the amount of refund as per rule number 89.4. Hey Mr. Exporter, do not conclude and finalize that amount you can claim refund. Sorry, wait, பொறுத்தீரே refund சும்மா வராது, process ஆகுது. This is one step. This value compare with two more values. How much you got here now? 10,58,000. That you take into account and proceed further. Proceed further. In your page number 495. Look here. Order of granting refund of initialized ITC. Now here, the maximum amount of refund formula as per rule number 89.4. How much you got, Raja? 10,58,000. That much. That is one point. As per rule number 89, sub number 4. The flow I am explaining, understanding, sir, easy for you. That is what classroom required. As a student, visualizing difficult. Then that value compared with the point number B. Carefully listen, my dear. The balance in the electronic credit ledger of the applicant at the end of the tax period for which the refund claim is being filed after the return in form gesture 3B for the said period has been filed. Tell me, my dear professional, if I am claiming 10,58,000, my refund out of my credit only, how much credit I have with me to claim this much of refund professionally? How much credit I said? 15 lakhs. So out of 15 lakhs, I am claiming how much credit? How much refund? 10.58. And the balance amount? 4.42 lakhs. Is the balance na? Qualify for ITC. Clear? That means when I apply for refund, I have the credit of 15 lakhs. Before getting the grant of refund, if I utilize the money for many other liabilities, my 15 lakhs now reduced to 5 lakhs. How much? 5 lakhs. Now department coming and granting the refund. If the refund grant to you, credit is there how much? 5 lakhs, not 15 lakhs. If the department giving the refund to me, corresponding amount of refund I should be reverse the credit or not? Yes or no? 15 lakhs minus 10.58 lakhs. That much, if I reduce the credit, then only I can get the refund. I apply only for refund but not reduce it. I will 15 lakhs credit is there. Out of that, refund application made how much? 10,58,000. Department will look. When you made application, electronic credit, the balance electronic credit ledger of the applicant at the end of the tax period for which the refund claim, this refund claim has been claimed, is being filed. I filed for the month of August, I filed the refund claim. After the return in Form GSTR 3B of the said tax period, how much is there? Out of 15 lakhs, I utilized 10 lakhs. Means return filed by 20th of following month. After filing the 20th of following month, the GSTR 3B under section 39, I came to know available credit how much? 5 lakhs is there. Not 4.4. 5 lakhs only is there. I have utilized, man. I have utilized it. Is clear? Now, that balance after filing the return, the balance in the electronic credit ledger of the applicant at the time of filing the refund claim. At the time of filing the refund claim is rupees, how much is there? 15 lakhs. Refund claim பண்ணும்போது 15 lakhs. I taken proportionately 10.58. But after doing this, I filed the return, GSTR 3B, section 99. There my liabilities are there. I have to pay. I paid by using 15 lakhs. How much utilized it? 10 lakhs. Left over credit, how much is there? 5 lakhs. After filing the return, at the time of making the application for refund, 15 lakhs is there. I proportionately identify the value 10 lakh 58,000. Now, for the tax period for which I filed the return, after filing the return for the given tax period, the available credit balance at the credit ledger only 5 lakhs is there. Now, department looking to grant the refund. If the department grant the refund 10 lakh 58,000, that much is the amount credit available with you to reverse the credit? Not there. Therefore, among the three, whichever is less, which is less, that is the final amount to claim refund. Refund is rupees 5 lakhs. This is called Rafi sir classes. You get my point, sir? Can you have the problems on it? We'll look at the problems. If possible, I will get a workbook. That workbook I give it to you, soft copy எனக்கு தேட கஷ்டமா இருக்கு. I will have the workbook with me. I will get hard copy. I will get hard copy for this. Just can easily able to look the problem. Here, something time taking process. No problem. I will try. If not, I will get the book. Workbook only I will get. You take this problem, one example. Yes. Exam problem ಇದೆ. Page number 370 from our workbook. Yeah. This problem, I request my friend to read. You read, Raja. Somebody read them. Because you are helping to me by reading. This is the, I will give it, Raja. I will give this and you start to read. In the meantime, I will get the workbook also. Yes. Please read, going and read, Amma. I will come. Start to read. Regarding taking place. Read. One minute. Wait. Now read, Raja. No. Wait. Why it is not there? Triggering not there? Blinking. Just to hold it. Little bit, hold it, press it. It should be stand. It should not blink. Now okay? Now just say hello.
Hello. Hello.
Now okay. Please read.
Zenith Electrotech Private Limited, a manufacturer of precision electronics, has furnished the following details for the month of February 2025 for computation of refund under Rule 89, subsection 4 of CGST Rules 2017.
One pick.
Assume that
Final,
all
final.
other conditions prescribed under the GST laws are fulfilled. Transaction details for February 2020. Opening balance of ITC 4 lakhs. ITC availed during the period including 6 lakhs claimed
Enter.
under Rule 89, Section 4A, cross for
Final. Enter.
28 lakhs.
Final ಇಲ್ಲ brother. Sorry.
4B.
இதா? இல்ல சார். இருந்தா கொடுங்க. ஒரே book
Zero
என்ன
rated
பண்ணுங்க?
supplies
எனக்கு
made
reference
during the
தாங்க.
period without payment of tax under LUT includes 120 lakhs covered under Rule 89 4A 4B, 750 lakhs. Supply of goods other than zero rated supply, domestic taxable turnover 320 lakhs. Compute the maximum refund admissible
Thank you, sir.
to Zenith Electrotech Private Limited under Rule 89, subsection 4 of CGST Rules 2017 for the given tax period.
Very good, sir. We will work out now. So, ಅವರು வெளியே போயிட்டாரு நம்ம சார் அவர் நம்ம பேர் சார் இப்போ கொஞ்சம் டீ இதில் கொஞ்சம் போட்டு கொடுங்க அதிலே இதில் இருக்கு சார் கொஞ்சம் நான் எடுத்து வந்துட்டேன் கப்பில் இருக்குது அதே கப்பு போட்டு கொடுங்க சார் இப்போ கூட நான் போட்டுக்கிறது என்ன பசிக்குது கால் சாப்பிடுது இல்லையா தேங்க்யூ சார் நான் போட்டுக்கிறேன் Yes, brother. Thank you. Thanks. Yes, sir. In the given case, we want to apply formula-based refund. That's all. Rule number 89(4), where turnover rule number 89(4)(a), 4(b) should be included. Now, in the given case, in the month of February, opening balance of credit should not be considered. Exam problem, CA final problem it is. Then ITC availed in the period. How much? 28 lakhs, 6 lakhs claim under the so it is included here. Included is include. We want to include also. So net credit, how much? 28 lakhs. Multiply by export turnover, how much? Zero supply. 7 lakh, 7 crore, 50 lakhs. Divided by total turnover. This plus this. 750 plus 320 is equal to 1070. Then equal to how much refund amount? How much? 19.63 is the lakhs. Refund, which we compare with two more points. What is two more points there? One is after filing the return for the tax period under section 39 GST 3B balance credit. Compare with at the time of making the application for refund the credit available in the books. And whichever amount, whichever is less. The other two information not available. Therefore, we can confirm this is a refund amount. Like that. Only thing is procedure I have to understand. Now, look here. How much you got here? 19 point. Maybe round off, but here is explanation. Cut amount cut 19 lakh 62 617. Very good. Rounding off under GST law, nearest rupee 1, 50 paise above. 1 rupee. Below 50 paise, ignore it. It has a reference section 170. Section 170 says, which also given the material. People will ask, sir, income tax multiples of a 10 or 100 rupees. 10 or 100 10 multiples of 10 rupees. But here not so. 1 rupee only. Is clear? Now please come back. Further more points to be referred here. Yes, sir. Doubt? Go ahead. Ask the doubt. Article. Huh? Blinking are there again? Huh? Blinking பண்ணக்கூடாது. Blinking ஆகக்கூடாது. So that blinking avoidனா என்ன பண்ணலாம்னா it should be like this. Okay, 1 minute wait. Ask now.
Sir, in the total turnover, no sir, adjusted total turnover denominator, the exempt supply is also included, sir.
Obviously.
Exempt plus taxable.
Yes, everything will come.
Exempt supply of zero rated supply.
Exempted turnover which attract nil rate.
Okay.
If we supply into India, if that turnover is there, that also take into account in total turnover, because the credit is common for all.
Okay, in that common grade we take in these two divisions.
Yes, correct. Exemption is possible to take only when this belongs to that particular common credit.
Common credit. Okay, sir.
Which we can't able to bifurcate. Unless, sir, one credit exclusively used for supply and that has been cleared into DTS, sir. That credit fully IT is not allowed. That time, that turnover should not be considered.
Okay, sir.
It's clear, sir. There's a reason for your information, give the clarification, Mama. Here, there is a clarification for this turnover. Look here. Turnover includes and excludes. For the formula, here, turnover, you are asking the denominator, correct? Yes. Adjusted total turnover, point number, you see point number E. Adjusted total turnover. You read, Raja, calmly read by understanding. Don't get tense. Somebody, something, I want to know the provision. Get my point? Because you are the person facing the examination. You are the person to face the result. Get my point? If I ask some doubt, that fellow will feel something. So what? Let them feel. I am there with you to clarify the doubts. You get my point, sir? So please read slowly by understandable manner all the points up to here, up to this point. Go ahead, Raja.
Adjusted total turnover means the sum total of the value of the turnover in a state or a union territory as defined under section 2 clause 112 excluding the turnover of services, and B, the turnover of zero rated supply of services determined in terms of clause D above, and non-zero rated supply of services with effective from 8th October 2024 excluding the value of exempted supply other than zero rated supply during the relevant period through notification number 20/2024.
Yeah. Here what happened? This excluding the value of exempt supplies other than zero rated supplies during the relevant period. This exempted supplies for which the input used for exempt supply, no ITC. That means in the formula, net ITC not containing the ITC belongs to exempt turnover. Then why you take that turnover? You get my point, sir? It should not be included. You get my point, sir? If that exempted turnover, that exempted supply, if we export, it become a zero supply, will be numerator. Whatever numerator will be denominator. Then multiply by credit. That credit containing the credit attributable for exempt supply also, which is now become a zero supply. That time we take into denominator. Otherwise, exempted supply, only exempt supply, selling in India, nil rate, that relevant credit not qualify for ITC. Refund varadeva, neither numerator nor denominator. That's why I asked you to refer this point. Further read, Raja. Point number A.
A. The value of exempt supplies other than zero rate supplies, and B. The turnover of supplies in respect of which refund is claimed under subrule 4A or 4B or both, if any, during the relevant period omitted through notification number 20/2024, CT dated 8/10/2024, with effective from 8/10/2024.
So, exempted supplies other than zero supply. If exempt supply is in the form of zero supply, should be included in the turnover. It's clear? And this omission is causes inclusion. Rule number 89 4A 4B was excluded actually, which is omitted now. Now it should be considered now. Get it, sir? Then come back to some own problems to work out to get the commendable knowledge in this regard. Yes, this is the excellent problem which you are able to have it. You should be. Yeah, this problem. Yes. Again, I requesting you to somebody read. Read the problem.
Determine the refundable amount for the month of April 2024 for Avinash Exports Private Limited, a registered business located in Coimbatore, Tamil Nadu, in the following cases. Export of goods or services without payment of tax under LUT, letter of undertaking. Supplies made to SEZ unit or SEC developer without payment of tax. Accumulated ITC due to inverted duty structure. The refund claim is being filed under Rule 89 subsection 4 or Rule 89 subsection 5 of the CGST rules 2017 based on the following details. Maximum refund amount as per prescribed formula in Rule 89 subsection 4 or 5 is equal to 5 lakhs. Balance in electronic credit ledger at the end of April 2024 after filing JSTR 3B is equal to 4 lakhs. Balance in electronic credit ledger at the time of filing refund application, say on 15th May 2024, is 6 lakhs.
1, 2, 3. Whichever is? Which is 4 lakhs. See how easy it is to answer. This will come in the exam of multiple choice questions. Definitely will come. Get my point, sir? Answer to this. Is clear? Now come back. Here, rule number 89.5 is coming. 5, which I will refer now, which is called as inverted tax structure. Meaning what? Inverted tax structure means, I will show you and explain to you with the help of a diagrammatic presentation. As I told you, you just look and understand the subject, and once you understand, you won't forget even after you qualify. Look here. What is my inverted tax structure? See, I am manufacturer X. manufacturer, X limited is manufacturer. Manufacturing finished goods F. Manufacturing finished goods G. With the help of raw material A, common, where I suffer the payment of just how much? 18%. 18% highlight. And input service I received, where ITC and input is spare parts. See, spare parts, stores, packing material and all is capital goods or input goods? Input goods, debit to P&L account, no. Therefore, here also what rate? 18%. Input service is 20,000. This is totally given. So, having the raw material and spare parts, packing material and all, and with the input services produces two finished goods. One is 5% GST finished goods, other one is 18% GST finished goods. Now, my input in what percentage is? And out what percentage is? 5. That means whenever I purchase, I have higher rate of GST. Whenever after manufacture I am selling, falls under a far lesser rate of GST. Resultantly, in my books, all the time I am running with excess input tax credit in the electronic ledger. Can I ask for refund? आपको refund मिल जाएगा. That refund will be allowed to you with formula. Rule number 89, sub rule number 5. A formula. Little bit lengthy formula, but easy to understand. The formula here is as follows. Is the formula. Look first. Net credit, you know, same as you understand in the rule number 89.4. Same as rule number 89.4. Net credit. Net credit should be on input goods, input services. Net credit and input goods, input services. That. But here, this net credit only on inputs, not input service also. Net credit on input goods. Input goods net credit, the credit is for inverted tax structure divided by total adjusted turnover, what you understand in your rule number 4A. 4 multiply by turnover of inverted rate supply of goods and services. Means in the earlier example I showed, no, raw material 18%, spare parts 18%, finished goods 5%. That is called inverted turnover. That turnover multiply with net credit of input goods divided by total turnover, that is 5% GST, 18% GST, whatever turnover for the tax period. That output called as A. From that deduct, again same credit, same as this, net credit divided by ITC and input services, but cannot be capital goods. This is net credit as you understand the rule number 89.4. That you multiply with tax payable on such inverted tax supply of goods on this tax payable. Is clear? If that comes B, A is rupees 100, B is rupees 80, excess how much is there? 20. If positive, claim for refund. If negative, no refund. And this particular 20 rupees take into account and compare with after file the GST 3 been written for the tax period, credit available in the means for the month end credit. The month end credit only now we are going to show in 3B. So that month end credit simplifying. Further compare with at the time of making the application for the refund, the credit available in the electronic ledger. Among the three, whichever is lower should be claimed as a refund. Is clear, my dear? Now, this point I want to bring with the help of numeric example by showing here. Now we know, we came to know. Now you tell me, in the given case, What is the inverted rate turnover? 5% turnover, inverted turnover, or 18%? Only 5%. Inward 18%, outward is 5%. If inward 18%, outward also 18%, or inward 18%, outward is 28%, no inverted duty structure. So inverted turnover is only how much here? F, 5 lakhs. So inverted rate turnover, how much? 5 lakhs. Multiply with net credit only on input goods. Here net credit on input goods, how much is there? 48,000 plus spare parts also inputs only. Spare parts also inputs. How much? 12,000. 48 plus 12, 60,000 divided by total turnover 5 lakhs plus 2.5 lakhs. How much? 7.5 lakhs. 7 lakh 50,000 is equal to how much comes in? 40,000 should be treated as a minus tax payable on such inverted turnover. How much? 25,000 they given here. So 25,000 multiply with net credit. How much? 60 divided by total credit. This 60,000 also. Input goods, input services together. How much? 80,000 is equal to how much? Is equal to how much? 750. 18,750. Now it's called what? B. A minus B how much? 21,250 is the amount to claim refund as per the rule number 89.5. Get my point? 21,250. 21,250. Same. There is the material. Now tell me the formula. Just recapitulate formula, Raja. Formula. Refund under rule by 89.5 is equal to inverted is equal to inverted turnover multiplied by net credit only on input goods divided by total turnover. From that deduct GST payable on inverted turnover multiplied with net credit divided by net credit on input goods and input services. If positive, refund eligible. If negative, no refund. Zero also no refund. There is a lesser amount, na? If I bring standard problem exam point of view, would answer? Standard problem from exam point of view. Examination problem is there. RTP question problem, in fact, it is. One can expect in the examination. Yes. Page number 375. I will hold my book because of my eyesight purpose. Now, go ahead, my dear, reading. Question number 11 from your page number 375.
Mrs. Carvalho mentioned that the registered GST supplier is engaged in the manufacture of thermal personal care products in the state of Maharashtra. The entity has provided the following details for the month of March 2025. Transaction details for the March 2025 below. Outward supply of urban phase green GST rate 2.5%, GST 2.5 GST. The value of supply is 40 lakhs excluding GST. The outward supply of oil 6% CGST, 6% SGST, value of supply is 80,000. Inward supply of inputs, example, essential oil, plant, 6% CGST, 6% SGST, value of supply is 28 lakhs. Inward supply of input solutions, example, packing, transport, 2.5% is CGST, 2.5% the value of supply is 4,50,000. Inward supply of capital goods, example, mixing machinery, 9% CGST, 9% SGST, value of supply is 20 lakhs. Additional information.
Sorry, go ahead.
Messrs. has respect of all inward supplies in the relevant GST 3B and the same is reflected in GST 2B. All conditions for claiming refund under inverted duty structure are compiled in it. No refund has been claimed for the month of March 2022. Compute the maximum refund amount eligible to Mrs. Herbal Glow Vessels LLP under the inverted duty structure for the month of March 2022. Note: include working notes as part of your answer.
See, very good question is. They are asking simple inverted duty structure. Now, they have inputs, sir. Inward supply of inputs. How much percentage is it? 6 and 6. Means effectively say 12%. Inward supply of input services is 5%. Inward supply of capital goods is 18%. But capital goods never going to qualify. Is clear? We should ignore it. Then the outward supply here is how much? 12% and 5%. 5%. Now here, among these two, which one is inverted duty structure turnover? 5%. Excellent. So take formula. Formula is how much? Inverted turnover, how much? 40 lakhs. Multiply by net credit. Net credit of what? 12%. 12% is 28 lakhs. Is what? Inputs. Inputs is net credit. Correct, sir? Net ITC. Input services we should not take here. Subsequently, part B we take. Okay. So 28 lakhs. 28 lakhs divided by total turnover. Value are there. Patiya Raja. So 28 lakhs on which working note we have to take. Working note. 28% into 28 lakhs into 12%. Excellent, bro. 3 lakh 20 3.36. Okay. 3.36 lakhs. David total number how much? 40 lakh 80,000, correct? And not 40 lakhs 80,000. Yes. How much comes? Exam problem it is 40 lakhs into 3.36 divided by 40.36. 3 lakh 40 lakhs into 3.36 lakhs divided by 40 lakhs 80,000. 3 lakh 29,000 411 3 lakh 411 2 8 no 3 412 lakhs 412 round off. Okay, is clear? This much is called what? A. Then reduce from that what? Further tax on this 40 lakhs. On 40 lakhs, what percentage, Raja? 5%. Equal to 2 lakhs. Multiply with 3 lakh 36,000 divided by credit on 3 lakh 36 plus 5% and 4 lakh 50. How much? 22,500 plus the 3 lakh 36,000. Total equal to 3 lakh 58,500. So 3 lakh 58,500 is equal to 48. If you reduce positive figure, how much? Refund amount. $960 is the refund amount. Now speak what is the formula. Just check the answer. 1,41,964 is clear. If it is 8 marks, 8 marks yours. There 7 marks question also there. 100 marks. This is RTP question, Raja. Exam question seems to be, but because I have not mentioned that because copyright, that's the reason I changed the names only. Values say. All my, openly I am telling you, open platform, my source, my preparation, my updations, CA study material, CA RTP, CA MTP, CA statutory amendments, CA compendiums. You are aware of that? There is a GST volume 1, volume 2 is there in the website for the members. Is my source. From that only I have developed. But I will use my application. If it is incorrect, then I will pinpoint is incorrect. You get my points. Always I will, because I know my platform is CA Final. I am addressing to CA Final students. If I am addressing CA Final students, if I prepare my own material, there is going to be debate. I never. From the day one of my lecture, I always take for me Bible, Quran, Bhagavad Gita is my institute material. CA Final material. CA Final material, course material, followed by RTP, MTP, amendments, followed by institute compendiums on GST. There in the institute website, updating from time to time. Elaborate explanations are given. Excellent manner is given. That is not prepared by one person. A group of team of people preparing. Expert team of taxation people are preparing that material. I really that. I accept that. I admire that. I copy that in such a manner that not a copy, without violating copyrights. I respect the institute. Get my point, sir. This question may going to come in the exam. 7 marks, 8 marks, well possible. 100 marks paper I am there, not 50 marks paper. IDT paper number 5, 100 marks. It's clear, sir. So we got rule number 89.4, we got 89.5 and its applications. As a whole, we got export of goods without payment of GST, namely under LUT. Other one is easy. Export the goods by payment of GST. Whatever you pay GST, you can claim refund. You get the point. So there is not much complication. With this is clear. Now coming to export of services. Export of services. Once I clear that export of services, then you get crystal clear in the approach in the exam point of view. Export of service also, my dear, one can export without payment of GST under LUT. Export of this also under LUT. Can export. Not equal to pay the GST. Export of zero supply is clear. And you can have input tax credit attributable for export of services, you can claim. But only thing here is export of services are considered. They said numerator what is export of services divided by total services turnover multiplied by net credit. The law here says if I export these services, payment should realize. Export in the month of April, payment came in the month of August. That export for numerator for my August month only, not April month. Point number 1. Point number 2. I receive the advance payment in the month of April, but I provide the services in the month of August. August month only my turnover, it is export turnover. You get my point, sir? You cannot apply. That is not qualify for refund. Suppose I export the turnover for 100 lakhs. Payment I received 120 lakhs. Meaning what? 20 lakhs excess I received, advance received. 120 lakhs minus 20 lakhs. Balance 100 lakhs is my export if I export the services for that. No, sir. I export the services in the month of April, but payment received in the month of August. It is my export turnover for only for the month of August export turnover, not in the month of April export turnover. This is only the point. We have problems. We work out. You get my point, sir? Simple to say, for export of services turnover numerator should be like this. Payment realized, service rendered. These two events should be taken place. That only numerator. Long back I expose services, payment received now. Now only numerator. Now I expose services. Tomorrow I receive the payment. Tomorrow only turnover for you. It's clear up. I will take up a comprehensive problem now. You have to cooperate with me, okay? Yes. Yes. This question number 10 from page number is that 371. In the book printed, it is available, page number coming. This book page number not that white edge. This page number is the booklet. But somebody asked me, sir, you have written some points you have written. That's itself you send as a copy to us. Then it's really, I should have been sent the original file. Working file only I sent. That's the initial place, some red ink marks are there. Then I said, okay, I'll send them. I will send because after yesterday also, after completion of class, I went to program there 8:30. Then by reaching my house by almost at 10 o'clock. Then having food and slept in morning coming here. So I will send you by maybe lunch break today. Okay. Could you please read, Amaraja? Somebody, question number 10 from the workbook. It's a comprehensive problem. Problems only makes us success to understand the subject. Nothing else. I believe, I trust, I success so far with my students getting highest marks in IDT. Please go ahead, sir.
GST registered entity located in unit engaged in the export of goods and services. The entity has furnished a level of undertaking and supplies goods and services under zero rate supplies without payment of tax, as per section 16(3) of ITC Act 2014. The following details are covered for the relevant tax period. Particulars for the tax period. Turnover excluding supply of services but includes exempt supplies of 8 lakhs and annual supplies of 2 lakhs, which is 76 lakhs. Zero rated supply of goods under LUT 12 lakhs. Zero rated export services under LUT 48 lakhs.
40 lakhs. Go ahead, please.
Non-zero rated supply services 10 lakhs. Payment received for zero rated supplies, including 12 lakhs advance for services yet to be supplied 48 lakhs. Advance received earlier, now adjusted against supplies made in current period 14 lakhs. Turnover of which refund claimed under Rule 89.4A and Rule 89.4B, goods 6 lakhs and services 6 lakhs, total 12 lakhs. Total ITC available on inputs and input services during the period 12 lakhs. ITC related to Rule 89.4A, 89.4B, eligible for refund under Rule 89.4, 2 lakhs 40. Compute the maximum amount of refund admissible to Mrs. Deluxe Exporter under Rule 88.4 of CGST Rule 2017, assuming all other conditions for refunds are fulfilled.
Okay. The question number is, which question number it is? Question number 10. Okay. So, question number 10. Now, here we do have what type of turnovers we have? We have rule 89 for A also is there, B also is there. Is clear? So, if that is the case, yes, in that case, what they are asking us to find out, Raja? They are asking us to find out maximum amount of refund. Very good. Service also is there here. Now, let's consider letter of undertaking. So, we have goods, we have service. They said turnover excluding supply of service but including exempted supplies, means this is only goods 8 lakhs, exempted supply 8 lakhs, but exempted 8 lakhs turnover is given here, and inward supply how much? Inward supply is not turnover, by mistakenly added in the 70 lakhs, therefore minus 2 lakhs. The balance how much? 74 lakhs is a turnover. Is clear as sir? Here. But include exempted supplies 8 lakhs, inward supplies 2 lakhs. So, I eliminate only inward supply 2 lakhs, exempt supply keep it with you. If it is qualified for export, we consider that. Zero supply of goods LUT how much? 12 lakhs. So, is export. Zero export of service how much LUT? Is also, here export of services is considered 48 lakhs export, but we have to consider whether payment received or not. Yes. Non-geoted supply of services means domestic tariff area. Payment received for geoted supplies, including 12 lakhs, advance for services yet to be realized. Total how much? 48 lakhs. So, 48 lakhs which includes advance 12 lakhs should be reduced, na? Reduced 12 lakhs. Balance 36 lakhs. Advance received earlier, now adjusted against supply made in current period. How much? 14 lakhs. The service nature only. Service nature only. So, earlier we received advance, now we pay service. You have to add or not? You should add. How much? 14 lakhs. Totally 50 lakhs. Totally 50 lakhs. Turnover for which refund claim 89.4A and rule number 89.4B 6 lakhs and 6 lakhs including 12 lakhs. Okay, but this turnover separately given, already given total turnover and separately given, which is not equal to reverse, which is not equal to remove, is there already included in the above. total ITC available in input services during the period. ITC available in input services during the period. How much? 12 lakh. Input services. Qualify for net credit. इसका what है? Net ITC. ITC related to 18(4)(a), 4(b) eligible for refund 18(4). How much? 2,40,000. This is already there in this. Already there. Again should have been removed. Therefore, includable item is included. Leave it. Maximum amount of refund. Is clear, sir? Now, what is your export turnover here? Export turnover of goods. Goods how much? 12 lakhs. Export turnover of a goods 12 lakhs. Export. Is clear? Thereafter, export turnover of goods. Export turnover of services? No, 48 lakhs. Here is then 48 lakhs minus 12 lakhs. Thereafter added advance received earlier. Now adjust against supplies made in the current period. 14 lakhs. Payment received for due to supplies including 12 lakhs. Advance for services it to be supplied. Service nature it is. For the purpose of for goods is considered, it is sufficient if you export the goods. Payment realization is as per the FEMA norms, Foreign Exchange Management Regulation Act. It specified payment should be realized within a period of 180 days. Within that period, you realize if the export sale process of the goods not realized as per the FEMA terms and conditions with the time limit, I should return back my refund. That is separate point. Export of goods, the moment I export the goods, I have the proof of export, I can ask for refund. Payment realization maybe subsequently, but services are considered, it is not so. Services are considered, it should be export of services should take place, payment also should be realized. You are aware of that. The export of services are considered is a tangible, intangible nature. You get my point, sir? Export turnover only for supply, service rendered, payment received. Both should have been taken place on the date of numerator. This clear as sir? So, it's somewhat confusion means what? When it is what we can when update the problem is so complicated and updated. But this is what the fact, the total value is 48 lakhs. Here export of services is 48 lakhs. That 48 lakhs containing advance payment and not containing the service for which payment is earlier, now we rendered. Ask them. Thank you, sir. Solunga. Tell me. Hold that.
Sir, whenever in the question advance is given, sir, you have to always take a service only, sir.
Not like that.
Because for you told for goods there is no parameters to check whether advance is received or not.
Parameter is there.
For goods also.
See, advance means what? See, if I export the goods today, I have proof of export. Tomorrow I can go for claiming the refund. Time limit is from 2 years is there. From the export, I claim the refund. I got it. The payment should realize or not?
Yes, sir.
The government will monitor. The Department of GST is monitoring. Custom Department will monitor. When the payment is not realized, within the specified period of time specified with the FEMA, then I should return back the refund. How the department come to know? There is a payment remittances called as foreign inward remittance certificate. Foreign inward remittance certificate, FIRC. Now it become EFIRC. EFIRC, electronic foreign inward remittance certificate. The moment payment realized to the banker having the act from the bank, the department has access whether this payment of refund realized or not. This payment of refund realized or not. What you export FOB value? So much. How much realized? Equal amount or more or less the leverage is given around the 5% or the percent is there. I am able to provide to you that leverage more or less that 5% or 10% allowed. But you export FOB value 1 lakh, payment is only $10,000. 1 lakh FOB value exported, 90% variation, proportionately refund allowed. The balance amount return back. Later on realize the payment. That time you have to intimate to department, sir, a payment realized within the extended period of time of Reserve Bank of India. Then I can reclaim the refund. That time you can claim refund. The points are there subsequently. Is clear, sir? Now please come back. Now I will put this instead of making the going on debatable issue. I will present this. What is our export turnover of goods? LUT 12 lakhs. Is clear? Now look here. Export turnover. How much? 12 lakhs. Is clear? Thereafter, export of services. 48 lakhs less advance plus provided today, rest to advance previously. Total how much? 50 lakhs. Is what export of services. Export of goods 12 lakhs, export of services 50 lakhs. Is clear, Baba? Then once you got this, export turnover 12 lakhs, export services 50 lakhs, total export how much? 62 lakhs. Is clear? If you got here, directly apply the formula. Formula over of that? Formula. Credit how much? You got credit 12 lakhs, no? 12 lakhs credit. So 12 lakhs net credit multiplied by 62 lakhs divided total 74 you got here. Straight away present here. In the given case, total turnover. Answer, total turnover. This one 74 lakhs because 76 minus inward supply. Thereafter zero supply services. Thereafter non-zero supply 10 lakhs. Thereafter exempt supply, as you told, exempt supply if it is not common, not generated, that should be eliminated. The 8 lakh rupees eliminated. Thereafter 8A, 4A are included, 4B are included. Therefore, how much comes here? 74 lakhs plus 50 lakhs plus 10 lakhs plus minus 8 lakhs. Balance. Quickly. 126 lakhs. See, 126 lakhs. So come back here. Refer 126 lakhs. My refund amount is equal to 12 lakh divided by 126 multiplied by 62 is equal to 5 lakh 9,476. That's it. Concept clear. Exempt turnover, if only for lower clearances, that turnover should be eliminated. Nowhere the symptom is there, exempt turnover for export. Is clear? Look the answer here. 5 lakh 90,476. 5 lakh 90,476. Is clear, my dear friends? Examination problem, one can expect this problem. With this, the refund chapter focus from the exam point of view I have covered, my dear. And one more point is there. My sixth sense says that there may be a question like that in the examination. What is that? Export of services. There is a big circular issued by CBSE. With that, I will conclude the refund chapter for your batch. In your material, volume 2, export of services, volume 2. Yeah, refer here, your page number 489, export of services. This is full page. This full page. This circular I am explaining here with the help of numeric example. You understand it. Look here, my dear. A incorporation from South Africa. I used to say A incorporation of USA. Now, USA. Now, get out from here, from classroom discussion. You get the point? Yes. See, we have not attacked any person. Somebody attacking us will be such a manner that should not be think to attack next time in his lifetime. Get the point, sir? Have we gone to trade war? No. Trade war initiated by other person. Tariff master. Idiot. Approach in foreign trade. Idiotic approach in foreign trade. Not that they have levied on our product this type of thing. There must be a system. There must be some protocol. Just I have the power with me. I have the power. I'm an examiner, sir, evaluating the paper. Now I'm not doing so. Earlier I used to do. I have the power. I can put 0 mark. A person written very nicely. Just because if I have put 0 mark, na, what is going to happen? Action against that fellow or not? That is what is going to happen. Because of he has a supremo power, so much of weapons in hands, should not be do like that. Is getting see not to. This is badly impact the trade practices, sir. It ultimately hit our CA profession also. You get my point, sir. If my client is exporter, sir, excellent exporter. He is a 80% of export is to USA, sir. Now those USA companies saying that 50% tariff means tax bear by the exporter. My profit is 25%, sir. How can I bear the 50% of tax? By doing the work, you want me to get the loss or what? So I can able to export. Therefore, an import. For me, to find the time of a new venture, new buyer takes time or not. For 6 months or 1 year time takes means till the time I should make the payment to employees or not. Huge expenditure for me, fixed cost here. If I retain the employees, tomorrow I cannot get these employees. Manpower is an important asset for me. Get my point, sir? If I ask them to go today, they will go with a compensation. Tomorrow they will come, they're never going to come back. Then there must be a protocol. Sir, this is a system we are going to adopt in next year. If you're willing, you execute. Now what happened? Already we have contact with others. Some of the payment is in advance. Our Indian exporters exporting the cloth, major cloth product, and pharmaceutical companies, we are exporting the goods to them. We already got a signed contract. Previous years we have a tie-up contract, purchase order received. Now we are part by part exporting the goods. Today all of a sudden, that means within 21 days it is going to increase again. 25% immediate effect. What is this? This is not a right approach. It's not a, that's why it's an idiotic approach, I said. Sorry to say this word. Idiotic approach of economic policy it is. That much getting angry, anxiety I am telling you. This, if my exporter, my client not able to export the things, he become liquidate, na? Then as an idle, I am the sole idle for him. I have my entire time spending to that particular client only. The client is not there now. Then where have to go? So this is going to hit the economy like anything. We are saying that we will manage it. By the time of managing, we have to survive, no? Everything should be in a planned manner, well before information. Then we come to know, oh, next year this is the tariff. If next year is the tariff, now itself we have an arrangement. If you want, you being imported should pay the tariff. Otherwise, you won't export. Halfway through of export, sir. Sometimes before you won't believe, sir, when the summer season, our Indian exporters A-grade quality of mangoes, thousands of tons of mangoes, crores of rupees of a stock, A-grade quality, without eating by Indians, for the others, because of the best price purpose, our farmers are exported. When exporting from India, there they have QC check. Those company people, USA people, here checked already, fit for export, given the clearances, and the goods has been exported, Raja, is about to reach the USA port, already gone there. Maybe in a 10 days, they are going to deliver the goods there. That fellow there, no, these mangoes we are not to buy, not quality fit. Mutta, if it is not quality fit, why you people give the clearances in the Indian port to export the goods? The goods has been exported by giving the clearances. Only after clearance only can export the goods. And reaching that place, you putting one more standard, one more condition, it is not met, therefore rejected. Okay, if rejected, what has happened? Can we get back? The moment it come back, two things takes place. One, this perishable nature. It is not going to come in one day. It takes 1.5 months, 2 months to return back. By the time, due to the atmosphere through ocean, these goods are going to perish. Possibility number one. Possibility next important thing is the freight to and fro is more than the value of the goods. Farmers unable to buy. They said throw into the Bay of the Arabian Sea, throw in the ocean. Happened. Huge loss to our Indian farmers. Next time as Indian farmer, loudly, insurance. Insurance is there. This is called ECGC, Export Credit Guarantee Corporation. a mandatory insurance for loss of sales realization. If it is covered, the insurance company will give the loss of that coverage. Yes. Otherwise, no. That insurance coverage will come. It is there in the customs law. Here also we are going to refer that. And the FTP will refer that point also. And the customs law is there. ECG is one of the mandatory requirement. Loss of profit, how we got here, insurance coverage. Like that, loss of sales relation, ECGC is there. See, the thing is, we trusted you as our best friend, but you shown the other face. Get my point, sir? India trusted the USA as a best friend, but you are not stand on. From the day one, I used to say in the class, India is nowadays extend the hands and legs, catch me, I'm a best friend of you. But it is not so. He is not a real best friend. I used to say in the class, my recording, if you see, you understand. The best friend for India is from the day one of independence to India is country called Russia. When there was World War, the Pakistan attacked the India, Second World War. That time, America supported the Pakistan and about to attack India from the soil of the Pakistan. Without any that time delay, quick decision taken by Russia, and the Russian Navy occupied our entire Arabian belt. Navy came. Come, who will come? Going to come to attack India? We are here to face it. By seeing that face, that particular huge crowd of Navy of Russian, America dropped proposal. Pakistan, I'm not going to come. You go. We beat in the Pakistan like anything. They surrendered. They laid down their weapons on their standing on their particular knees. Please allow us to go back. Then we given the mercy to them, or go get out from here. If the Russia not came that time, this part of Pakistan, with the help of America, might have been attacked the India like anything. America is a friendly nation. No, from the day one, not friendly nation. Because of emerging economy of India, to control the China, India, America extend the helping hand to India only to, not as a good friend, only to dominate the China. Now is almost realized, India is realized now, this is not a right country to rely as a best friend. This entire, you should aware of it. See, whatever the industry is shaking is one way or the other going to impact our CA profession. Try to understand. CA profession will be depending on the industrial growth. If my client is very good, exporting good, profits are growing, your fees also will grow. Get my point, sir? We can't work for 1,000 rupees, 200 rupees fees. We work for 10 lakhs, 20 lakhs fees. Get my point, sir? This is what our efforts. This is what is happening. But India is single word so far not opened. What they say, we want to protect our Indian trade market. We stand for that. No compromise. Hey America, why you are doing like that? Such a roadside dialogues, not there. Roadside dialogues are making the tariff master only. Every day one dialogue. But India never open a single word against that master. Which master? Tariff master. But anyhow, now please come back. I am going to complete this, Raja, because export coming now, I get anxiety to share with my beloved friends. That's it, nothing else. I have no intention to take your valuable time. I respect your valuable time. Now, one circular for export. Actually, South Africa I said. Earlier I used to say USA. Now I'm not interested to use the word USA because of this particular tariff master. Now, this A incorporation of South Africa placed the purchase order to provide the services to Indian company Mrs. Bharat Limited, which is Indian company in India, service provider. Is clear as when they provide services, the value, let us say 100 crores worth of the services, purchase order for service. While providing services, they are able to meet the maximum extent of requirement of the client. Some of these services, which is Bharat Limited, want to depend on the others. They want to outsource. They approached one company called Mrs. M and Company of Mexico. Could you please provide the services of 40%? 60% you provide. Mexico accepted. At the request of the Bharat, they provide the services. They provide the service. They provide the service. How much? 40% of 100 crores. They made the payment. They provide services. Yes, they provide the services and they made the payment. Paid. How much? 40 crore. And they paid to them 60 crore, namely 60%. Now, for this Bharat, value of export of service, value of export of service, how much? Is it 60 crores or is 100 crores? Here the circular says, in the given case, Bharat treating the 40 crores as import of service. How much value? 40 crores. Paid IGST under RCM by Bharat. It is a import of service paid IGST under RCM. If so, the export value of services for Bharat is 100 crore, where Reserve Bank of India permitted to realize part payment, no problem. Reserve Bank of India said, okay, we understand this problem. You have been outsourced to 40% to others and treated as import of service. You pay the IGST. That means you exporting is not 60 crores. You are exporting 100 crores. We treat you as your export turnover as 100 crores for refund purpose. Get my point? Net credit multiplied by export turnover, total turnover. Export turnover numerator, we will treat you as a 100 crores with condition. One, whatever you outsource to other country as import of services, you paying IGST. You paid. Second one, Reserve Bank of India permitted, you realize part payment, no problem. Reserve Bank of India said. With these two conditions satisfied, export of 100 crores for Bharat Limited, export of services. With this, refund chapter is rapid revision applicable for the coming exam of September 2025 CA final exclusively completed. After having the break of 10 minutes from now, I will take up the assessment, reassessment, self-assessment, provisional assessment of non-failure of returns, assessment of unregistered persons, like that. Okay.